All right, hope everyone's doing well. So, wanted to just make a video over today's price action. Let's see here. So for the most part, you had an endless pullback and then a bear breakout. But if you really look a little further, you had a bull trend, and which basically led to almost a 50% pullback. Excuse me. But really, you had a bull trend line break to a lower high major trend reversal, and a second leg down. So if you really look at it, leg one, pullback, leg two, or you can call it just a bear breakout of this trading range, which pretty much what we got. I do think we will eventually close this gap, but let's look a little more in detail. So bar one, as always, 20% chance it is the high of the day. 20% chance is the high of the day. If you buy above, stop below. But you got to ask yourself, you're in the middle of this range, so probably not a great thing. Bar two, probably going a little bit higher, but once again, you're in the middle of this range, so it's not that great. And in general, 20-25% chance that bar two is the low of the day, 20% chance that bar one in this case is the low of the day. So now you have a low one short, bear C, a bear trend, and a pullback. Do bulls get out? I think they can. Like I said, I don't think it's a great short for that reason. And some bulls will buy. Maybe they'll buy a 50% pullback, but I think realistically, a lot of bulls, they know it's a trading range. They'll buy here and they'll buy lower. I don't think many bulls are going to get out below this bar. In other words, what I'm saying is I don't think we're going to get a strong bear breakout. And you could have bulls buying a 50% pullback with the stop down here. So again, second entry short, you argue double top, but above the moving average, not great, tight trading range. Second entry buy, or three pushes down, 1, 2, 3, but again, tight trading range. Triangle, 1, 2, 3, and a higher low. So two lower highs, one higher low, it's a triangle. In general, 50-50 chance you get a bull breakout, 50-50 chance you get a bear breakout. But again, above the moving average, so it's not that great. Three consecutive bull bars, probably sellers above, at least going a little bit lower. But once again, first bar under the moving average, so I'd be suspicious about selling. And we have a second entry buy, but it looks like it's a micro channel. Still not willing to buy right here. But if you do, I think you have a wide stop down here. And it never triggered, so you got to wonder. But it's a micro double bottom, down, up, down, up. But once again, you just got to be a little suspicious of this. And now I have a second entry short. So what do you notice so far about the day? We're getting a lot of overlap. Bulls are not willing to hold above bars. And now we have a bear breakout. So maybe, two pushes down, 1, 2, or maybe we have a wedge, 1, 2, 3, trying to form a double bottom. We could be failing. And if that's the case, we may test down to here. And look at that. So now we have another bull bar. So, will this be the, mind you, the bears want an endless pullback. Will this be the bar that rallies to a new high? It might, but you got to wonder if this was if this is a wedge, we may break below it, and it's a lot of overlap. So I think it increases the probability that we get a bear breakout, but it's still pretty neutral. And notice that the good signal bars, they're not triggering ever since here. So we had a good stop entry here, didn't trigger, but it's below the moving average, so it could have been better. Here, below the moving average, didn't trigger, could have been better. Here, it's a 1, 2, 3, 4 bar micro channel, didn't trigger, could have been better. And we're just kind of just selling off. So at some point, you got to be a little worried. Okay, trying to form a gap, but it's a 1, 2, 3, 4, 5, 6, 7 or 8 bar micro channel. First slip could fail. So looks rather strong, probably always in long. Probably will get at least a second leg up. Okay, we have a second leg. Now we have a second entry short. You got to be suspicious that, once again, we're above the moving average, but we're not above a major, arguably this is major. I think this is really more important. So we still couldn't even get above that though. So I think bulls that bought probably get out below here. It's still a possible broad bear channel. You know, we reversed up sharply here, reversed up sharply here. Maybe we will reverse up sharply right here. 3 consecutive bear bars, probably sellers above, and we're starting to just kind of pull back. And then we got this. So real quick, one thing Al mentioned in the webinar was he was not willing to buy. He was skittish about buying because of the micro channel. We had 1, 2, 3, 4, 5, 6 bars without a bull body, and it's a micro channel. So odds are the first up will fail, and we'd at least get a second leg, and that's why he wouldn't buy right here. And when you get a bar like this that's just fast, you just got to sell. But selling down here, big bar, huge risk. The odds are, you know, sideways. I mean, obviously, probably won't get a sharp reversal up immediately, but you're probably not going to go that much lower. So bears that are selling are scalping. Terrible follow through increases the odds that we're going to go sideways, but the risk is big. If you buy above here, stop down here. So some bulls, rather than buy above, are going to buy at a 50% pullback, which would be somewhere down here. And by the way, if you really think about it, this tail is half of the risk of arguably this bar. So if you were to sell the close, put your stop above at 50%, sell off, or you know, if you're risking, basically it's basically half your risk is the easiest way to put it. And you can see as soon as we got there, we touched it. And you could take that a few ways. You could also say, okay, if I don't think we're going to go a measure move down on this bar, but I think we'll go a little bit lower. So if I instead of buying here, putting and betting that we go back up to here, why don't I, you know, instead of buying here and putting a stop down here, target up here, why don't I wait and try to buy a 50% pullback where I can put my stop here and go for twice my risk here? Now this is all kind of more hypothetical. I think most traders that are going to realistically take that trade, if they're going to buy as this is going down, they're going to scalp out over here. Plus it's the weekend, so it's really, I don't think it's not a great thing. You know, it's more of, trying to find an example. It's not like selling this close, putting a stop measure move, and putting a target down here. You know, that's really an intraday trade. It's such a big bar that it's going to have influence. But anyways, as I said, bulls are going to also, they'll buy 50% pullback. Some bulls will buy above. And there's your 50% traders. Bears sell this close, disappointed. The ones that didn't scalp out, and look what they'll probably try to do. They'll try to get out break even. Some will possibly try to get out below this bar. But if you did buy, I would not put a stop below this bar, put a stop below here. For that reason, you know, look what happened right at this low. The low of this bar was 2 even. The low of this bar was 175. So traders that bought above put their stop 1 tick below, got stopped out, and we immediately found buyers. Everybody knew that we were probably going to fall below there, and they knew they could buy. You know, look at the, you know, you could argue, call whatever you want. You know, low 1 short, low 2 short, really doesn't matter. It's a lot of sideways movement, bear bar, but not that impressive, and then a doji, and bulls buy. So will bulls buy above? They can, but again, tight trading range, probably will go sideways. The bulls really need to get a second strong close, and they failed to do that. So 2 legs up. So maybe we'll get 2 legs up, maybe 3 legs up and form a wedge and then sell off. Okay, so 3 pushes up, 1, 2, 3. Pretty tight channel. It's a micro channel, so probably the first reversal down will fail. Okay, kind of starting to go sideways, starting to form a base, you know, maybe a double top here. You can argue a wedge, 1, 2, 3, or maybe 1, 2, and 3, where it's truncated, where the third push is not higher than the second. Starting to form an endless pullback. I think bears definitely, bulls have to get out below this bar. Too much risk. We're going to test down to this close, which I think we will. And we did. So overall, not much to really say about the day. I would call this kind of, it's pretty similar to a Fed day where you have a report that's just so big, it kind of alters and splits the day up into two pieces. So I would really, once this, at this point, I'd consider this one day. Then when you get this bar, I'd really treat it as a different day. This bar is so big, it'll have so much influence that the reality is traders are gonna, they know, for one, they know they can just sell above bars and scale in. Look, I mean, just sell any bull close, you'll make money. Bull close, sell here, made money. You could scale in higher, make money. If you sell here, you sell more here, made money, made money. Sell that close, make money. Bears know it's probably going to be disappointing. It's a big bar, terrible follow through. If I buy any, bulls know if they buy below bars, they'll make money. And I'll do yesterday's real quick. Yesterday was actually a Fed day as well. I kind of forgot. Is that right? It's today. No. Okay, I'm missing a day. There we go. So when you get a moment like this, far above the moving average for a lot of bars, I don't know what this is, but we haven't touched the moving average since here. I would treat this all as one move, even though it's a second day. It's still, this has influence. So we hadn't touched the moving average since here, and somewhere over here you got to think, gee, this, we hadn't touched the moving average in well over 20 bars. At some point, 99% chance you're going to touch the moving average. You're starting to get 2 or 3 pushes up. Traders are going to sell. Betting, we're going to test it. So really, coming into the day, bar one, as always, 20% chance it's the high, it's the low of the day. I think it's actually less because of what I just said. Far above the moving average, not above average price action, and we're probably going to have to get some sort of pullback. A lot of sideways movement here, so it's a magnet. Bar two, bad follow through, probably sellers above. Might be strong enough for a second leg though. Not a good sell setup. Lots of bull bars, 1, 2, 3, 4, 5, arguably 5 or 6 non-bear bars, so probably going at least a little bit higher. Bad stop entry short, probably going at least a little bit higher. Small bars, whenever you have small bars, that means the probability is low, so traders are going to sell, use a wide stop. I would not sell and put my stop one tick above. I still think probably buyers below for at least a little bit more up, maybe a wedge. 1, 2, and 3, or 1, 2, and then 3. Big bear bar, like I said, probably testing the moving average. Arguably, it's parabolic. 1, 2, and 3, 1, 2, and 3. Really doesn't matter. What matters is this looks like a leg in a trading range, and I'm expecting a bear leg in a trading range. Maybe testing back down in this area. You also have to be thinking, 3,000 is always a magnet. Look over here, 3,000 went sideways through it, so we'll probably, the market knows we're not far from it. So it's kind of one of those things where, okay, and these are what traders think of. They think of equidistant moves. So here's 3,000. We've been going up for quite a bit. Here's current, let's just for fun call it 3,020, 3,000. So if I sell the close and risk 20 points all the way up here, and I set a target at 3,000, what are the odds I get profit? Well, you can see it came close. And really when traders do that, they'll scale in and they're going to look at actual risk. So they're not going to, hold on for dear life. They're going to say, okay, went up a little bit, maybe to 24. So I really only had to risk 4 points. Now we're all the way down here. I can make 10 points profit. They'll probably get out. Traders think that way. So back to the day. Trend line break, first reversal down will fail. Bad follow through, but again, it's a wedge, so the bears want an endless pullback. Not a great buy. After these two bear bars, probably a small second leg. Starting to get a lot of sideways movement. Then we got a big bear bar. Okay, so we're at the low of the day. Big bear bar. 3 consecutive bear bars. 60% chance we'll get a swing down, maybe 2 or 3 legs down, and possibly a measured move down from either the open to this bar, open to this bar, or close to this bar. Bad follow through. I still think it's a minor reversal up, but it's a possible second leg trap. Whenever you have a second leg trap, you have to remember everything is an opposite. So a surprise is the opposite of a second leg trap. You know, like here, surprisingly big bull bar. Well, it's a possible second leg trap. Leg one, pull back, leg two. But in this case, the channel is so tight, the odds favor more up. Here, it's possible that it is a second leg trap. You know, you expect, we had a spike in channel, you expect a trading range after this channel right here. So it's possible we just bottom right here and, you know, reverse. Maybe we get a measure move up, but after 3 consecutive bear bars, I think we will get a little bit more down. Disappointing, so it is a warning, but this, you know, this bar I don't think is strong enough to replace this. So I still think we're going for that measured move. 60% chance we'll get at least a second leg down. Good follow through for the bulls, but it's bull bar's getting a little bit smaller, so possibly warning, and we're getting to the target. We're trying to close this gap. Arguably, you know, we have a gap still open, so we'll have to see. You know, did we close the gap? Arguably we did, but it's a possible negative gap, and it's a big, you know, you can argue outside up and then outside down. Probably going at least a little bit lower. We failed to get above the moving average. Whenever you see this, I would definitely get out of longs. Aggressive bears can sell. Probably need a stop up here. I mean, they can argue. You can probably put a stop up here just because it's a surprise. But I don't think we're going much lower below this bar. Another bear bar, bull bar. So arguably 3 pushes up, 1, 2, 3. And we have arguably a higher low, 1 and 1 higher low, so it's triangle. Inside bar, you can sell, but not great probability. Then we got a big bear bar. So it, you know, looks like a wedge, 1, 2, 3. But the bulls they really need to break above the moving average. Could be forming an endless pullback. Now we have a micro channel, 1, 2, 3, 4, 5 bar micro channel. So arguably sellers above. Also, one thing to point out, it's a reasonable buy. So traders will buy here and buy more lower. So it's target. So a lot of your bulls, and someone asked a question about this kind of topic of using small stops. They said, Al, I always get stopped out. I would, you know, I'd buy above this bar, put a stop below, and I'd get stopped out. Whereas if I buy above this bar and I buy more lower, I win. Well, that's because a lot of traders do that. They know that they know it's a low probability buy, but they know it's a reasonable buy. And typically whenever you do something reasonable, if you scale in, use a wide stop, 80% chance you can avoid a loss, maybe higher. So bulls will buy, put a, you know, wide stop somewhere down here, and they're just going to buy. They're going to buy below the bar. You know, maybe they buy reversal up. I don't think they would do that. It's pretty close to your entry. But I do think, you know, low one short, basically at the low of this bar, they'll buy. And they'll take profits up here. So really, you know, tight range, you know, 50-50 chance arguably we get another bear breakout. You know, the one thing I'm questioning is we're not getting above the moving average, and that concerns me. And you got to wonder, when the bulls keep failing to get above the moving average, that is a sign of dominance. The bears are controlling the market. It's not as strong as this, so it's not as climactic. You know, this is very climactic. You know, if you think about it, price can really only get, the further away it gets from the moving average, the less value it is, and therefore the less traders want to, the less traders are going to want to enter in that direction. So it's kind of like, you know, at this moment, we're far away from the moving average, so price needs to go sideways. And probably a better example is over here. Here, far away from the moving average. Do you really want to buy even further away? Let me think of a. See, I had to re-download TradeStation, so I'm kind of having to draw things from square one here. Let me try this. So arguably, here's the moving average at the close of this bar from here to here. You know, what's more likely? Hang on. Sorry. Yeah, so really forgot what I was saying, but Traders don't want to sell far above because they know that we'll probably have to get closer to the moving average. Therefore, we'll have to go sideways. So they know they have a lot of time to, well, I meant if I said sell, I meant buy. They know they have a lot of time for price to go sideways, but they could probably buy lower and not have to buy this far up. So over here, bear breakout. Could be kind of a trending trading range kind of day. So new low of the day, bear breakout, probably at least a second leg down. Got to be a little suspicious. Probably will close this gap, and there you go. Big bull bar, but again, kind of a surprise. 50-50 chance you get a second leg down. It's a wedge bottom, 1, 2, 3, and if once again we have this target, but I think we might get a second leg down. Second leg down. If I was short, I'd probably get out above the bar though. Now we have a second entry buy, but a doji. 3 again, wedge bottom, 3 pushes down, 1, 2, 3, and we're beyond that move. So will we get buyers? The doji, it's not a great buy signal. So it could be sellers above, could be a double top, but I think we're trying to form a bottom. And there we go. So I hope this video helps. Thanks for watching.